Well, let's get across the market open now with Henry Jennings from Marcus Today on this Friday morning. Henry, nice to see you there. Nice to see you when we've got U.S. markets at fresh record highs. Who would have thought?
Who would have thought? Here we are, Independence Day, and it is fresh record highs for the US. And no doubt we're going to see fresh record highs on the ASX 200 as well today. So it's good news all round, I guess. The one big beautiful bill got passed. So that is going to be another trigger, I guess, for some more buying. And of course, we got that jobs number as well last night, which was much better than anticipated, although some commentators I read were trying to pick the eyes out of it and say that it still wasn't that great. But 147,000 as against the market going for 110,000, pretty good. And I guess it makes Jerome Powell's job just that little bit stickier because he's probably in no rush to cut, despite his boss, if it is his boss, Donald Trump, telling him to cut and calling him a numbskull, of course. So, yeah, interesting times, Nadine.
Yeah, absolutely. But it was really interesting to see, to use that word again, investors choosing to go with the positive narrative, good news being good news about the U.S. jobs market, and ignoring the fact that the market is now pricing in a cut come September, not this month. So we'll see how that plays out. We'll also see how it plays out with this big July 9th deadline looming in terms of trade. I mean, for now, it looks as if investors are just, crossing their fingers and hoping for the best.
I think that's certainly been a policy that's worked, to be honest. With all-time highs across many markets, that has been an investment policy that has worked out fine. What I think is going to be interesting, of course, is that it is Independence Day in the US, July the 4th. And as Donald Trump is going to be signing the one big, beautiful bill, you get the sense he has this sense of drama about him. And you get the sense that maybe he'll announce one or two more trade deals to go with the UK, China and Vietnam. Although when you look at the UK, it's more a framework. And when you look at China, it's more a peace accord at the moment. And when you look at Vietnam, they're still being slugged with 20% tariffs where they weren't getting any tariffs before. So it's not exactly a win for Vietnam. But certainly you get the sense that Donald Trump will play to prime time signing of the bill and announce more good news to heap upon the US as it heads into barbecue weekend, I'd imagine, on the 4th of July. So, yeah, interesting times. And I would imagine we'll see a kick along again next week in anticipation of that July deadline either being extended for some or some deals being announced at least maybe early next week or even on July the 4th.
Yeah, lots of Americans standing by the grill with a beer on this July 4th long weekend. So trading volumes were pretty low in the States, just in anticipation of the long weekend. Do you reckon that trading volumes might be a bit subdued here as well, considering we won't have U.S. markets trading tonight?
Well, without the US holding our hands, maybe, but I think the mood is sufficiently optimistic that we won't see massive drops off in trading volume just because the US is closed. It's good to actually have some clean air. It's good to wake up on Saturday morning and go, well, we don't have to worry about what the Dow did. We can just focus on what it's going to do. Of course, the US futures markets will still be trading, so we'll still get a little bit of a feel for how things are panning out. But I suspect we'll be pretty much as normal. But it is school holidays, I think, for some at the moment. I've seen lots of school kids around, so maybe some people will take off and use that as an excuse. The snow is good, etc.
Yeah, if you can afford it. All right, let's get to some of the big market moves here. Clearly, CBA has dominated last financial year. Yesterday, an interesting thing happened. We saw iron ore prices rise. We saw a big switch, it looked like, from the banks into the miners. Do you think this is the start of something perhaps a bit bigger?
Well, I did write this morning in the newsletter that these things, it doesn't end with a big bang. It tends to end with a whimper, and I guess we have seen Commonwealth Bank fall from 191, 192 bucks, all-time highs, massive earnings multiples, back down to sort of $181. I don't think we're going to see Commonwealth Bank dissolve back down to 130, 140, where some people value them at. But I do think it is being used a little bit now as a funding mechanism. And as we rolled over into the new tax year, of course, it does mean that people are a bit more free to sell, and maybe some mums and dads have been taking some profits in Commonwealth Bank as well. And maybe as the money goes back towards the US, and we've talked about the end of US exceptionalism, and maybe we're back to US exceptionalism, at least in the stock market, maybe not in the US dollar. Maybe as some of that money flows back to the US, it'll come out of Commonwealth Bank of Australia, because that's been the important thing. Where you had that big fund in the US, Fisher, buying $1 billion worth of CommBank. And really, because it's liquid, it's got Australia in the title, it gives them diversity out of the US. But maybe we're going to see money flow back to the US market, somewhat out of Australia and somewhat out of Commonwealth Bank. And it may flow into BHP. The problem is, I guess, is that if you sell CommBank as an international investor and you still want to keep some diversity, what do you replace it with? And that is the conundrum. Interesting yesterday to see ANZ, which has been an absolute dog in comparison, was starting to pick up a few percent on CommBank, but it's got a long way to go.
Certainly so. All right, well, we'll see what happens today, given that we did see some pressure on commodities because of the changing interest rate expectations. Thinking of corporate news this week, Pro Medicus yesterday announced a couple more contract wins. I mean, bottom line, does it justify the valuation?
Well, again, this is a very much a sentiment stock like Commonwealth Bank. We have a lot of high-priced growth stocks, and Pro Medicus continues to deliver new contract wins. It's a $300 stock now. It's quite extraordinary. And one of those wins yesterday was quite a big win as well. So we are seeing those wins, and the momentum is still with it. And Newton's first law says that a body will remain in motion until an external force acts upon it. And at the moment, there is no external force that is acting upon Pro Medicus. And if you can justify CommBank at an earnings multiple of 30 and Tesla at an earnings multiple of 142, then Pro Medicus may not look quite so expensive.
Interesting. Now, other news, there was Domino's. Yeah. We don't have to go there. I'd like to get your thought on Gem Life. I mean, this was yet another week where we had a pretty well-received IPO. So does that give you, again, a bit of confidence heading into the remainder of this financial year?
Yeah, I guess it does. I mean, this one kind of snuck under the radar, I guess, to some extent. There was so much, fanfare about Virgin, and a little bit of fanfare about Greatland, of course, in the resource space. But this one kind of slipped under the radar. And it wasn't really until I saw some media coverage of it in the last few days that I even realized it was happening. We're so used now, I guess, conditioned not to be looking for IPOs unless you're in the broker loop. Then you don't get offered these sorts of deals. But it is good news. It is certainly good news for an ASX, which has been shrinking in recent years. And even, we've got Santos, one of the blue chips that could also disappear, but we've lost many a household name, the likes of CSR and Boral over the years. So it's good to see a new one come on. It's good to see Virgin there. It's good to see Greatland, and it does open that IPO pipeline. And I think, both Virgin and all of them, really, all the IPOs have shown that you can float stuff, you can get a good aftermarket. They don't necessarily have to bomb straight afterwards. And even, buying a company from private equity like investors did with Virgin hasn't been an absolute disaster, as has been the model in the past.